Welcome to the NFO review series. I'm Rin Agarwal, and in this video, I'm going to be reviewing the Kotak Multicap Fund NFO. With all the interesting different themed NFOs that are coming, here comes a multi-cap NFO, a good old multi-cap fund. First off, what is a multi-cap fund? Well, 9 months back, SEBI changed the definition of the multi-cap fund to make it more true to its label. So currently, a multi-cap fund basically has its portfolio at least 25% in large caps, 25% in mid caps, and 25% in small caps. So there needs to be a minimum exposure of 25% in each of these market caps. Now, this fund, the Kotak Multicap Fund, has its own proprietary model that it works on, and their model tells them the allocation needs to be somewhere like large cap between 26 to 31%, multi-cap 37 to 42%, and small cap 32 to 37%. That's what their model is telling them to have currently. The fund is allowed to have 20% in foreign assets, and it is also allowed to invest 10% into REITs. Now, Kotak, of course, has a very good track record as far as equity funds are concerned. It does run one of the largest flexi-cap funds in India. It's following its own proprietary model, which is a combination of mean reversal and momentum, and looking at various factors like the management quality in terms of corporate governance, capital allocation, of course, valuations, and in terms of business, whether the business is sustainable or not. In terms of the allocation to various different types of companies, they are looking at various themes like, for example, financial stocks, which includes banks, insurance, financial services companies, of course, the IT sector, looking at companies in the infrastructure sector. On the mid-cap and small-cap side, they are considering auto ancillaries, housing finance companies, companies in the agri sector, as well as retailing companies, among many other sectors that they would be considering as part of the portfolio allocation. The fund provides good diversification considering that it's going to be investing in large cap, mid cap, small cap, and the fund manager does have another 25% to put in high conviction bets. Of course, there the fund manager can invest wherever they want to. There is no restriction in terms of market capitalization. But one must remember that mid caps and small caps always make the portfolio volatile. My take, well, I think you can invest in this fund provided you want to invest in a fund that has exposure to all different market caps and which is highly restricted. At the same time, if you want exposure to a Kotak fund because you like Kotak's style of management, that's when you should be looking at getting into this fund. Remember that this category change has happened only about 8 to 9 months back. So, honestly, there's not much past data that one can look at to evaluate this category, because prior to these rules changing, essentially, there were all different sort of allocations that different funds had, and there was no standardization, which is what is being bought in by SEBI now. So one really can't go by the past performance. It's pretty much a new category. I would actually prefer a flexi-cap fund because flexi-cap funds do not have market cap restrictions, and the fund manager can really decide to put into whatever stocks they want to based on the conviction levels that they have in those stocks. There are many flexi cap funds that are already available with more than 20-year track record. I would prefer to stay with them than go in for a new category and a new fund, which, remember, depending on the collection, the expense ratio is also going to be higher. So my take would be to actually stay away. Make sure you click on the bell icon to subscribe. We do look forward to your feedback. Till then, bye-bye.